Welcome, Slabs. How you doing?
Hey guys, can you hear me?
Yeah, welcome.
Awesome. Appreciate you guys bringing me on here, and hopefully this is the first of many conversations we have regarding some updates on the project. So again, thanks so much for having us.
Love it, love it. Man, we're glad you guys could get on here.
Absolutely.
Absolutely, it's definitely been a whirlwind of a week, and I
So
appreciate the coverage you guys have given us and the support you guys have shown. So it's been nothing but positive.
no, of course. I mean, good products speak for themselves, right? And I think that's what we like to do. We just like to kind of put eyes on really great products that are being built. So, I mean, with that in mind, the best place to start when it comes to digging into projects is oftentimes a founder. So tell us a little bit about yourself, your background, what kind of brought you to DLMM
Yeah,
in the
totally.
first place.
So my first crypto cycle was back in 2017, but it wasn't until the 2020 DeFi summer, the 2021 cycle, where I started really diving deep into LPing, on projects like Uniswap, PancakeSwap, Onchain, if anyone remembers that one. I was big over there.
Yeah.
But that's kind of where I got my first chops and understanding, kind of what that looks like, how much yield can be earned, like seeing multiple 100% returns yearly just from providing liquidity, right? And then this cycle, before the Arbitrum airdrop came out, that's where I was kind of starting around projects like Camelot Dex, if you guys are familiar with that.
Yeah.
But then once the cycle kind of pivoted to Solana is the retail chain, or the kind of the new up and coming chain of the cycle. That's where I kind of fell in love with Meteora and their tech stack. Obviously, everyone on Solana probably knows just kind of how amazing and how insane their growth has been so far. And so that's kind of where DLMM, or dynamic liquidity market makers, came from, right? Is my love for finding out how much, or how profitable and how much yield consistently you can make on different DeFi protocols like that.
Nice, nice. So you've had this interest, you've had this experience before with kind of experimenting with liquidity. So tell us a little bit more about the solution that you provide through DLMM, and kind of walk us through. I know this could be a sort of tricky area for some, but we definitely want to break it down in a way that everyone can understand. But definitely tell us a little bit about you guys' solution.
Yeah, totally. So, I mean, there's definitely a shorter term vision and a longer term vision that we have for the project. But just as like an overview, or like a quick elevator, it's a DeFi centric hedge fund, right? With an emphasis on liquidity provision. And the goal is to become one of the fastest growing self financing funds in the world, right? And starting with essentially $0, or you could say our $5,000 liquidity pool that we initially created on our own. We've grown that to over $80,000 in assets under management as of today, which we haven't announced yet that that's what we just reached. But and that's one of the fun things too, is like you guys were mentioning, the kind of like we're on a little bit of a dip right now. I feel like we're one of the few projects that up or down price wise, we're relatively price agnostic, because our treasury grows even as the price goes down, right? So at all-time highs of our token, we had about a $75,000 treasury. Currently, about 40% off of all-time highs, we have an $80,000 treasury, right? So we gained an extra 13% in assets on a decrease in price. So that's why we're price agnostic. Is obviously we want the chart to go as high as possible for investors, but in terms of like a long-term strategy, it's volume that matters for growing that over time. But then I guess just real quick, what I'd say is like kind of the ethos of DLMM is supporting DeFi and supporting projects and people building in DeFi, right? And so the goal is to use our liquidity across the board to help fund other projects, whether that's just by directly adding to their liquidity pools and bolstering their liquidity there, or like, for example, our partnership with Algon the other day is pretty mutually beneficial. We're adding $5,000 in assets to their pools, to their copy trading strategy. They're earning a yield off of our funds. We're earning a yield off of their strategy. And at the same time, we're helping each other in this sort of hyper growth stage. So kind of finding partnerships and projects that we align with, again, mainly DeFi focused, is kind of the goal, to find a mutually beneficial strategies across the board.
Nice, nice. So I kind of want to I want to dial in on this treasury
Mhm.
because I think this is the most the most interesting part of it. You guys started with 5,000. Was that self-funded? Um and well, yeah, let me just ask that. Is that self-funded or
Yeah, so that was just right out of my own pocket, and again, that wasn't put into the treasury. It was just the initial liquidity pool because we didn't launch with like Pump Fund or Bond Fund. We used something called Rev Share, which essentially they just gave us the code for our volume tax, and then we self funded the actual liquidity pool. So it wasn't like a bonding curve or anything like that
got it?
that you see on these other launch pads, and that's allowed us to bring in also like another revenue stream because just off of that pool we created, I think we've earned $4,000 or $5,000 of those fees, and that's not even counting the 3% volume tax, right? So just another way we can bring in revenue there as well. That's sometimes underlooked.
Got it. Got it. So, and then on top of that, you mentioned 80K as of today is, and that's not announced yet. So that's alpha on our screen. Am I getting that right?
Absolutely. And one other thing, then I definitely want to get into a little bit later. So it's $80,000, not including the 2.5% DLMM supply that we purchased back about a month ago because we just purchased it off the open market. We have a sort of a buyback program that I could talk about for like an hour, so I'll definitely try to be brief with it. But like essentially, the way that I believe our price speculation um, keys in on like, okay, how much do we have in assets under management? What is the liquidity pool value? And how much have we bought back directly into the liquidity pool? There's a bit of an algorithm you can put into finding like how you should value this business. And then obviously multiply by some sort of like future earnings or like how you value a business, right? Like what's their PDE ratio, that sort of thing. And so we made our buybacks at strategic levels where we feel that our token was fundamentally undervalued based on the price of our token and our assets under management, right? And so we purchased about 2.5% back, around like 100K, 120K market cap. And I have not been including that in the value of our treasury because I feel like, okay, we did a 10X or a 7X or 6X on that. Like that's like $16,000, $18,000 in added value that we have. But it's like we weren't quite earning a yield on those tokens. So it felt disingenuous to say, oh, we have $100,000 treasury if you include the price appreciation of our tokens. So we've just been valuing our tokens at what did we pay for them, which is about $3,000, even though today they're worth about 18,000 or so.
Got it. Okay, cool. So I want to run through the next few things rather quickly because we got about 10 minutes left. So let's talk
Gotcha.
about three things. I want to talk about the sources of your revenue stream, right? Like the
Mhm.
different places where you source liquidity and do the yield generation. I want to talk about lean into a little bit on the buybacks. And then
Mhm.
lastly, like where you guys are taking this. I want to hit those three things in the next 10 minutes. So however
Boom.
you want to start.
Gotcha. So I'll go over the strategies real quick because that's pretty simple. Right now, we're running 6 different strategies. Obviously, we're looking to continue to expand and diversify that. But right now, I feel pretty comfortable compounding these ones. So obviously, Meteora DLMM on like kind of mid cap tokens is what we're one of our hot wallets is focused on. Then we have more of a majors LP on HawkFi. If anyone's familiar with that, they have a concentrated liquidity pools that we've been utilizing for mainly like Solana USDC or like JLP USDC or JLP Solana pools. We have Project X on Hyper EVM, which we're farming like Hype USDT, K Hype USDT, which is allowing us to dual farm Project X airdrop, the Kinetic airdrop. Also, I guess I should mention is the HawkFi also is allowing us to farm dual points and Meteora points and their own HawkFi points. So we're farming like I believe 4 airdrops just between those 2 different platforms we're on. And then the other 3, I guess the other 3 strategies would be we just briefly put a little bit of funds on BSC for Pancake Swap because the volume was just insane over there. So we're not going to miss out on that. And then we just announced the Algon copy trading strategy, which we added the $5,000 to that just a couple days ago. And then we also just announced how we're leaning into the prediction markets on PMX because I think that's going to be one of the super underrated ways to earn essentially a risk-free yield, because it's
1000%.
because you're getting all of the funds back, right? So there's no impermanent loss. Maybe the yield might not be as insane as some of the runners you'd see on like the DLMM strategies and whatnot, but I think from a risk-free yield standpoint, it's going to be huge. Obviously, we're waiting for them to migrate their pools. Funny enough, from DAMM to DLMM pools, ironically, but so we're waiting for their migration there, which should be kind of the go ahead to really start aggressively funding some of their pools. So those would be the 6 main strategies we're running at.
I think Dom wanted to interject real quick.
Yeah, I just have to ask, because these are a lot of different strategies against across a lot of different protocols. Is this you alone kind of doing this, or do you have a whole team that's helping out with specific aspects?
Gotcha. Yeah. So I'm managing, I would obviously say, the majority of the funds, but we do have 3 other fund managers. I guess one strategy that I didn't mention is we also have like a trench liquidity protocol that we're kind of bouncing around, where it's essentially just a trench hot wallet that's run by like one of the best traders I know. It's a pretty small portion of our funds. It's like $2,000, but they've already earned like literally 200% returns on that wallet alone. It's kind of insane, but that's neither here nor there. We have 3 different fund managers outside of me. One of them running the prediction markets, one of them was running the Binance, and then the other one, like I said, was running the trench hot wallet.
We'd love to have them on stream, that trader, by the way, if that can be arranged. We'll talk about that off.
Absolutely. He said that he's willing to hop on. I just figured it was a little short notice for him to get on this, and obviously we're kind of short on time too. So yeah, I'm sure he'd love to pop on.
All good. That's crazy.
Okay.
We love the PMX vertical. I think, like you said, there's no impermanent loss, so the returns might be smaller, but you can really size in on that, and you don't have to worry about much. So love that.
So yeah, I guess we'll let you keep cooking. You told us about the strategies. Now I guess I think the next thing was like the burns.
Gotcha. Yeah. So far off of obviously it's hard to manage or hard to exactly say, okay, like when we hit these hyper growth stages where we basically doubled our treasury or 60% increase to our treasury in like a couple days, it's hard to say like, oh, we're earning a 2% weekly or 3% weekly on our assets, right? So when we insanely increase the treasury, there's going to be a slow lag of like what the actual returns look like. But to date, we've earned 13,500 give or take in profitable yield, and then we've burnt 100% of that, which was about 11.1% of the token supply so far. So that puts our like circulating supply with the 10% team lockup at like what is that, like 79% circulating supply. So we definitely think that the supply shock will begin to kind of ramp up here as we keep moving on, which is awesome. And yeah, like the actual nominal value of the burns has definitely been increasing as our treasury has been increasing, right? Like yesterday we did 355 in burns. Today we did another 250 in burns versus like I think last week we were averaging $100, $150, that sort of thing. So definitely seeing the nominal burns increasing, which is awesome, because obviously all of that money goes directly into the LP from the buyback, right?
Very nice. That's the part that I'm very interested in, deflationary tokenomics. That's like what I've studied for a very long time, and I think you guys, so far from what I understand in the market right now, are the closest probably to a sort of like supply shock when it comes to like the imbalance between or the mechanics between demand and supply that you guys have going on. So huge. One question I wanted to ask you about was, two, will you start a vault, number one, and number two, what do you plan on doing with the supply that you have? Is there any way that are you going to be able to maybe stick that and stake it in a vault or something like that? Or tell me a little bit about
what do you say is the supply that you have? You mean the holders of the token or the supplies that we have? Because I do have an announcement on the supply that we have, but sorry, go ahead.
The supply that you have. Yeah, you said you have an announcement, so I'll let you reveal
exactly.
What you can.
So yesterday, we actually put 1% of our supply, along with about 11.5 Solana, into a DLMM pool for DLMM. So say that 10 times fast, right? But so we basically added another like 10% to the liquidity, like $8,000, $9,000 to our liquidity pool. And the goal here is to give a bit of a price floor, right? So we put the 11 Solana in. So if the price were to dip down, it's an extended range. So like I think 30% down, 120%, 150% upwards. So we'll be basically DCAing into our own token if the price dips, and we'll be earning fees both ways if it goes up or down, right? And then what we're doing here is basically trying to earn an additional yield on the tokens we bought back. Because like I said before, I haven't been calculating that into the treasury because it felt disingenuous if I wasn't earning a yield on it. But now I feel more comfortable to say, okay, we actually do have almost $100,000 in assets that we can earn a yield on, because just yesterday we earned 360. It hasn't even been 24 hours. We've earned $360 off of the pool that we opened yesterday, right? So it's like a 4%, almost 5. It says, I'm actually looking at it right now, 4.7%, 24-hour fee to TVL, right? So like definitely cooking in that. And one thing that I'm curious to see, and so we're waiting to do the actual burns from this, is one, half of the fees we're earning in this are our own tokens. So we're obviously going to burn that side of it. But then the question is, okay, if we go out of range to the upside on this pool, we would likely have to buy back then with the Solana that we've DCA'd into. That's full amount. So I'm very curious to see what the actual outcome of this new pool that we started looks like, because it could be an insane amount of volume added from, or sorry, not volume, an insane amount of buyback pressure from us as we DCA in to our own token and then buy back as well. So it's definitely an interesting one.
Got it.
I was definitely really excited. I've been keeping it under wraps kind of for this show. I was hoping to kind of announce that because it's a pretty big jump in our TVL,
awesome.
I guess you could say.
That's awesome. More alpha for the boys. You're welcome. Dom, go ahead.
And then real quick on the copy trading strategy. If you had another question about that, we can do. If not, we
go
can
ahead.
keep
Going. I got a question after.
Gotcha. So for the copy trading element or like a vault, definitely something we're heavily looking into. There's just a lot of factors in there, right? So one being we have a lot of different strategies. So, okay, do you go with 6 different vaults where you can individually copy our strategies, right? But depending on which ones return the most, or do you factor in just one cross the board yield, right? And obviously what I've been saying since day one is the true best way to take advantage of our yield is simply buy the token, right? Because at the end of the day, whatever price you buy our token at, I can guarantee that over the next month, 2 months, 6 months, year, 2 years, we will be buying back at a higher price than you bought back in, right? As we continue to just do our daily burns, we've already bought back at 1 million market cap. We bought back at 800,000 market cap. We bought back at 900,000 market cap, right? So it's like we're price agnostic. We're doing the buybacks at whatever price we can, because again, it just adds every single day, right? But we do want to find a way to bring in more assets under management, right? Like the ALG guys have found a way to earn an extra yield for themselves by taking a cut from the assets under management that they're providing, as they should, right? And we definitely want to look into a similar strategy. But truly, it comes down to one: how do we do it, right? Like, so what is the actual structure of the vaults? And then 2, we want to have a little bit more data on which strategies are best performing to include them in the vaults, right? So like we've only been live for less than 2 months, and while the returns have definitely spoke for themselves, we definitely want to be very data focused and data heavy, where we can prove, okay, we're not taking other people's money into here and exposing them to too high of risks, right? Like it's one thing to manage the treasury yourself, but also manage other people's money kind of adds another factor, right? So we want to make sure we're doing everything, by the book and as straightforward as possible. And then also, obviously, there's like smart contract risks and all that stuff as well. So we want to make sure we're doing it, by the book.
Briefly before you wrap, one idea that I've been really interested in is the question of how can you grow assets under management quick, right? That's one way to, compound and grow this treasury rapidly, is just simply growing the underlying assets under management. Do you have any plans to go out and, talk to family offices, funds, people who are willing to put money into to grow this AUM, or has that been a thought across your mind?
Oh, absolutely. I mean, that's kind of how I've been doing it behind closed doors so far, is just individually pitching it myself to, whales, to people who I know have the vision of, okay, well, we'll invest, $3,000 to buy 1% of your product. And, that volume, again, like the fastest way to grow our treasury is going to be based on volume, right? Like there is a compounding aspect that we haven't been focusing on too much, because at these levels, I find that burns are more effective than compounding the treasury, just because every dollar right now at the lower market caps means a lot more. But as we continue to grow the treasury, into 6 figures and eventually 7 figures, right? There is currently it's a 10% split, where we would be about 10% compounding of the profits into the treasury to keep that compound, or that growing. But there's always subject to change, right? So if we decide, okay, well, we'd rather have about 20% compounding, 30% compounding, or again, just focus fully on the burn. So there definitely is a strategy there, but truly it comes down to marketing as much as we can, because the more people that talk about DLMM, the more people price speculate on DLMM, and the more volume comes in. And again, up or down, we benefit from it.
Nice.
And the floor raises, right? And that's the cool thing I think is the greatest, is like oftentimes as tokens decrease in price, there really isn't like a new floor. Sometimes when we decrease in price, our floor raises because our assets go up. So
makes sense.
Yeah.
Well, we got to go to the next one, Slabs, but I actually think you crushed. I want to talk to you more in the DMs after this too, because I know MCG's got a few ideas, but this is super interesting. Maybe have to have you back on for a longer form conversation.
Absolutely. Always, the door's always open, guys, and I appreciate everything you guys have done so far, and looking forward to seeing where we go with this.
Thanks,
Let's go. You're the man.
Cheers, boys.